Welcome, everyone, to the Kendall Report. It is Sunday night. This week, I don't think is going to be as big as last week. We had the Powell pump on Wednesday. That was pretty exciting, to say the least. But, you know, we don't really have, we do have PPI coming out on Friday. So it's interesting having the history I have. There was a time when the money supply used to be the primary thing to watch for every week, and people are just hanging on to every up or down on that. And now, you know, we're really focused on employment, and employment came out decent last week. We don't really have any surprises there, and nothing's really jostling or shaking the trees, so to speak. So we're likely to see a continuation. As most of you follow me on Twitter, you already know that the database is up at 48% on the intermediate. Huge jump. I'll go through that here in just a few minutes. And I saw somebody asking about the VIX. The VIX doesn't mean much to me. It's something to watch once in a while. But when I see these kind of buys coming in, this is similar to, and I'll go through like the details here in a few minutes, but this is similar to November of 2020. And it's pretty significant just because of the way this year has went. So more on this in a little bit. Let's take a quick look back on last week. Really, it was after the big pump, we ended up with the S&P up 1.1, NASDAQ up 2.2, Russell up 1.3, so nothing really big there. 9 of 11 sectors were positive. And of course, everything was about the Fed signaling, Powell signaling that they're going to do 50 basis points. As I argued both in the live room that day and afterwards, anyone that out here that didn't already know that, that wasn't a surprise to me anyway. I thought everybody knew it was going to be 50 in December, then 25. And then the question is, do we get 2 or 3 of them? I think everybody knows that already. I was kind of shocked at the reaction to the news, but there's just a lot of folks, they hear what they want to hear when Powell's talking and what they heard. And I said this, I know in the live room and maybe on YouTube as well, but what everybody heard was a Fed pause. That's what they heard. Meanwhile, we're going to be close to 5% on the front end of the yield curve. I went through that last week. So if you didn't see that, there should be, I think it was Thursday. I take that back. It was Wednesday night, I believe, after that. I went through the yield curve expectations, and we still have massive inversions and all of those things happening. So the dialogue that's out there is continuing to be, are we going to get a recession or not? And, that I saw some very uncredible people like the ECB and people like that saying that there's not going to be one, and how they could say that. And from a European perspective, I'm not sure. But anyway, that's what they're talking about. So before I go any further and go through some more details, hit the like button and let's keep the channel growing. I'm going to keep reminding you folks that literally a week from Thursday will be the final broadcast for this year. I do have hopefully some plans. I'm trying to plug the gap a little bit and have some content for you folks while I'm off, but we'll see how that all puts together. Sometimes my ambitions are not satisfied by the amount of time I have available. So let's talk about economic stuff coming out this week, and then I've got a couple words on what I think we're going to see here as we go forward. And this is a special edition. I'm going to go completely across the spectrum. I'm going to focus in on the S&P. I'm going to go across the entire spectrum here in just a few minutes, going all the way out to annual, quarterly charts, annual charts, looking at like going in depth on a lot of the long term. That'll be the focus tonight. And so hopefully you'll enjoy that part. But we look at economics. We got Monday, we got factory orders coming in. Nothing really big, but everything's expected to be plus 0.6. ISM, non-manufacturing report coming out, and that's at 52.5, so not in contraction. And like I've said before, things are pretty stable. Even with we're starting to see some creep on the continuing claims that we'll get out on Thursday. But Wednesday, we got mortgage apps. We already know maybe those seem to be actually stabilizing only because there's actually no activity. So whatever little activity there is in mortgages is going to be plenty to make maybe that number look like an uptick or something. Productivity is coming out. And if you recall, I believe it was 2 reports ago, we had a minus 4%, which is like if you get those kind of numbers, the whole economy falls apart if there's any kind of continuation of that pattern. So we saw a big drop And then we saw a couple upticks, and they're expecting this one to be up 0.5 is the expectation there. So moderate recovery, but that's a number I'm going to be looking at as we come into next year. Also, we got consumer credit, 28.08 billion. That's going to be probably an uptick as well. It's Christmas time. And then we have the claims expected to be 227, and then the continuing claims at 1.608. And I've been talking about this 1.5 number. Now the number to watch is if we can get over 2 million continuing claims, then that will finally start to suggest the Fed's moving things where they want, which they want people unemployed. That's what they want. They're trying to get that. That's the only way they figured out that they're going to do anything about inflation. And then Friday, the big report is going to be PPI coming in, expected at 0.2. Year over year is 6.7%. And that number is going to be looked at pretty hard. So, right at the end of the week where we're getting maybe some kind of pump and getting the good weekly closes or something like that. So that's really all that's coming out. Let's talk a little bit about what happened, I think, with the Fed. I just want to discuss that for a minute. Nothing really changed with the Fed other than it was almost just one of those aha moments that everybody said, wait a minute, this is it. We're not going to have rates going up a lot. But we also haven't seen the impact of rates going up a lot. And so there's going to be a lag, and the Fed wants to see what's going on. Like I said, over and over for the last several weeks, I think they want to break something. They want to see maybe the continuing claims get up over 2 million, and maybe on the other side, the JOLTS report, the job openings to get under 10 million. So, and like I said before, I'm not sure that JOLTS number really has any real validity to anything. I think it's kind of made up. I'm not sure what they're coming up with on that, but I think it's the metrics that I've made assumption. I don't know, but I believe that the two metrics that they're watching is that report along with continuing claims, because we're not, once that starts to increase on the continuing claims, especially if it did get over 2 million, that would be a pretty big number, and we'll probably start to see unemployment get affected from that standpoint. And like I've said a million times, and I'm sure you've all heard it, the economy is not the market, and the market is not the economy. So I know a lot of folks are still super bearish out there. This is a bear market rally. I will argue this in just a minute here with the database, what's going on, and the expectations. So I'm gonna hammer this thing down the best I can, and we're gonna go from there into technicals, and we'll do the long-term outlook from that viewpoint. So let's go ahead and get into the database. This is the daily database that we're starting with. It's at 82.30. We had on the daily, we had 670 buys, 250 sells for Monday's opening. So that number's been hanging around this 80 percentile range for a while now, for well over about 8-9 trading days. Let's go over to the weekly, and let me bring that up so we can get to the same spot here. And you'll see the weekly now is at 48.55. We were at 36%, so 12% pop here on this. And you can see the ratios are very bullish. Now, the only thing that I would say that I'm not as excited about is that the models that we're kicking in are primarily the 1.2 model. And that's a more aggressive model, but it's a good sign that things are starting to turn. They're basically 50-50 from that standpoint. If you look, if I go up on this page here and over in the far right-hand corner, you see that 1.232, the mapping, you actually can't see it, it's off the screen, but it's at 49.5 50.3 on 1.2, and 3.2 is mapped out to 50.67. So the reason why I bring that up, that the database is split down the middle between the two models. So it used to be very biased toward 3.2, and as volatility has increased, the 1.2 has become more not dominant, but has come into this 50-50 range with over the last couple of years, with just how the markets are picking up a lot of volatility. And that's what that model does best. It deals with volatility and erratic behavior better than the 3.2 model does. And so it really matches down. I mean, we've got 15,924 symbols in the database. And right now we've got, like I said, 58% of them long. And that's a material situation. Now, I keep bringing this up for you guys, but I'm going to continue out there on this, because this is really what this is about, is this forward looking. So everybody thinks, oh, it's just responding to what happened. And really, once we get over 42%, so we went from 36 to 48, this forward looking standpoint, we usually will get up to, in 68, 72 is a number. We're at 80% on the daily right now. So what this is telling us, a couple metrics I'm going to show you here, is this is just telling us that the models are, if we look forward looking here on the weekly model, I'll have to read this, I know it's small on your end, but the average days long is the 204 market days on the optimized weekly, and on 3.2 it's 321, on 1.2 it's 171. So we just got quite a few. We got 3,134 new buy signals, which suggests that we have an entire forward-looking pattern for at least probably 150 to 200 days. Now that's a better part of a year. This is going to throw us into Q2, Q3 as we come into the 2023. And I know a lot of folks are, it's really hard to make a turn with these markets. I don't fade the database because these are longer term ideas that are coming out. And then when we go through the technicals, you're going to see there's not necessarily, I'm not sure we're going to print an all-time new high just right away. I don't see that. Potentially maybe into February or something like that. So I'm not suggesting that we just rocket out of here, but there's a lot of symbols that are going to come in. And just looking at the weekly models, there's actually been, over the last 2 weeks, there's been roughly 4,600 plus new buy signals in the system. These are brand new. So of the 7,000 symbols, about 60% of them are new forward-looking buy signals. Now, they're all not going to go to their duration. They're all not going to be winners. But typically around 60% of the trades that come out will be a winner at some level. Some bigger, some will achieve what they're expected to achieve. We have a probability map on every symbol, all 15,924. When we get a buy signal, what the expectations is, what the mean, the standard deviations, what type of characteristics that happen. And that's why this database is so important. Most people are drawing trend lines on index charts, right, which tell you absolutely nothing about the depth of the market. What I'm able to see, we've got 80% of the symbols right now on a short-term basis are bullish, and that we're going to start some kind of segment where that number will start to drop, probably come back into 62, 58. As long as it stays over 42 on a short-term basis, we should get a rotation on the short-term, because some of these stocks that were bought and going back even into September, some of them into August and September, and even October, there's some really big trades that have been generated here. There's a lot of profits. So we'll see a bunch of those start to roll over, and then the short-term database will start to go down. But the intermediate database isn't going to change much as we go through the next several weeks, and it's going to need to maintain itself over the 42% level. So as you know, I said just a few minutes ago, I take off the last 2 years. So I'm 2 years, the last 2 weeks of the year. And what I want you to understand is that there's going to be, looks like a positive bias as we come in to the year. We'll probably see some choppy markets. I'll try to set this up the best I can before I walk out the door, which will be on Thursday night. I believe it's the 15th or the 16th. I think Friday is the 16th. And so I'll try to set all this up the best we can. But this database is a forward-looking event, not a backward-looking, not a current. Okay, we got all these buys and now they're going to fade. It's the opposite. So I've been preaching this for the last couple of weeks because I think it's important to understand. So let's go ahead and get into the S&P forecast. So before I get into the super long-term conversation we're about to have, let's take a look. This is the hourly chart. It looks like the hourly algos. I try to give you a setup as we come in overnight. We've got some downward projections right now, all the way down to 40.07, 39.78. I would love to see some really weakness come into the morning's opening, because that's when you want to buy these longer term trades. You want to buy in a downtick if you get the opportunity. So the algos are suggesting on an hourly basis that we're going to get probably about 3 hours of downside. There are some numbers to watch for, and on just for the overnight stuff, and then we'll get into market grid on daily, and we'll get through everything that I normally cover here. But the hourly chart is suggesting that we've got some potential downside. 40.37 is a big number. If you recall, that's basically where we are printing. Just we printed 40.67 low. This is hourly, so but that's a big number on the daily. When I go there, you'll see that 40.37, 40, 37.40, 37.37 is really big numbers right in there, and I think we'll hold that. But it does look like we've got some overnight weakness potentially coming in. We're basically up just a little bit at the moment. But let's go ahead and let's now get into, we'll walk this thing up. We're going to start bottom up. So we're going to start with the daily charts. Daily algos are flat here, but what they're suggesting, if we go through all of the expectations here on the daily algos, is that the trend mode is going to stay in place for multiple days, which means that upward angle of attack that I talk about, that's going to stay really in place. We're looking at staying in trend mode above 0.25 most of these days. PPM2 is even stronger. It's suggesting we're going to stay in a plus 0.38. And then the really interesting number here is the 40-period moving average, or the PPM3, that is starting to accelerate also in the trend mode. And when you get all three of these in trend mode, then you get that angle of attack working. So we've got some pretty good support. 40.27 is the 10-period moving average, and this is on the daily. 39.65 is the 21, and we printed down just a couple of days ago that 21 was 39.24. We printed down to 42, and the day before that we printed 41, 37, 41.25. So those are key numbers on the charts. Of course, you have the 200-day moving average at 40.19. I think we'll stay above that. Even the PPM 200 is showing an acceleration over the next several days. So it looks like that 200 is also going to be a range. So We may get into some choppy markets as we go through this week, but it really is kind of out on a solid trend there. So let's take a look at the market grid for today. R1 40.97. The high so far is 40.95. So we may not see any more upside than what we've already seen. Looking at S1 40.53 and S2 40.28, that puts us down into that moving average range I was just talking about. At 40.27 is the 10, and it's in trend mode. So if you see a number like that, you want to be buying there. That's a point you want to buy, not a point you want to sell. And so everything's set up pretty good. So we're going to keep going up the scale until we get to super long-term charts, okay? So now we go to weekly, and I've got Fibonacci targets on here. A weekly is suggesting that this week is kind of the peak momentum week, but that doesn't mean it's the peak price week. It looks like we've got a couple of weeks sideways. So as we get in, this is going to be the first full week of December. And as we get into this week, it looks like we still have some pretty positive PPMs here. And even looking at expectations going out several weeks, 2, 3, 4 weeks, the expectation is to stay in trend mode. And the 3802 is you get the number right. 3885 is the 10 period moving average right now. And it's going up right now at about 40 handles per week. So all of a sudden, that's going to be 3920, 3960 around where those lows were. So that those numbers are just going to continue to be good support. Of course, the 40 week is very similar to the 200 day, and it's at 40.31 with the 200 day at 40.27. So expect to see this stuff just kind of hover. Any kind of retracements, that's going to be some really strong support underneath this market right now. And like I said, for the most part, looking at economic data coming out, nothing really big until we get to PPI, the PPI on Friday, and then maybe that's got some market moving or sentiment changing type information there. But everything else is pretty straightforward. And I pretty much don't see anything coming out of the markets other than market sentiment. We're also a week before the big Fed meeting on the 13th and 14th. So we're looking at everything probably staying pretty status quo, following along this trend. And this will be the case on all the indexes. If I see anything different as we go through the stream tonight, I will point that out. So here we go. Now we're going to the next level. We're now going to a monthly chart. I'm sorry, this is a quarterly chart. It's supposed to be the monthly. Let me just see where the monthly is. Well, that's fun. I don't have it on there, so let me put it on here. So this is the monthly chart, and I think this is also interesting from this standpoint. I'm just going to update this algo real quick so at least we can have a PPM 10 running here. So algos are suggesting over the next several months that we're going to see an improvement, and that the trend, that the downtrend that's out right now, the 10 period moving average is right now at, let me get the right number here, at 40.30. So we're trading just above that. The 21 is 42.36, and everything is starting to point up toward 42 handle, possibility of 43.10, and there's just a lot of things pointing in that direction. Not to mention the algos are all suggesting that the downward pressure is going to start to dissipate over the next couple months. So as we come into 2023, it looks like we're going to stay stable, and probably stable means the absolute extreme on the downside is going to be 37.84, which happens to be the 40 period moving average, which also happens to be down at the lows that we printed just the other day before the Powell numbers. We printed, like I said, we printed 37.41, 37.42 the next day. So all of this, that's going to be your number to watch. This is your drop dead number. We take that out. Then there's something else going on. Something's wrong. And, we probably have some new information that we're unaware of at this time. So now let's go to now I'm going to the longer term stuff. And now we're looking at the quarterly. What's interesting about the quarterly, this month will be the final end of this quarter. And we still have, and I've talked a fair amount about this, where we have the PPMs are still in an uptrend. And I keep arguing that the long-term trends are still positive. And we're trying to get, by the end of the quarter, we're trying to get back over this 10-quarter moving averages, 40-40. That looks like that's a thing. As we come into the end of the month, we're over that. Then what's going to happen is this market grid is going to turn up on the quarterly basis. So we're going to have a little bit of a projection for the market to get higher. Like I said, I don't see an ATH all-time new high or anything at the moment, but anything's possible if things start to get carried away. And I remember there's a couple people that would come on to CNBC, and they're saying by year end we're going to be basically at an all-time new high. And at the time when that was happening, if you think about it, we'll just say the September period, October, November, those early numbers, I'm not sure I've ever seen as much negative, I would say negative sentiment that I've seen in a long time. Everybody wanted to be short. Everybody was telling me that the markets can't go up, and everything I'm getting, the short-term database started buying with both hands. We got up to 60% bullish, and now we're at 80. And so I'm just telling you, these are forward-looking numbers. So the database now moving to 48% on the intermediate is a big deal. That tells us that there's a potential for a couple quarters of positive numbers. And the numbers, I know I went to, let me do something. I'm going to put the 3-month on this chart here. All right, I thought this would be it. I thought I had this already set up, so I don't. But let's just put this. I just want to show you what the algos are suggesting on this quarterly, which is interesting in that we've got projections. Shoot, I just can't. There's not enough look back to do this. I thought, not sure why. I know why it's doing it. Bear with me. We need the cash markets. That's why it's not, there. It is. So everything's working now. I apologize for that. But you can see the algos are suggesting some backing off of this trend that's there, but basically staying in a positive trend mode in spite of probably some kind of consolidation. Like I said, my expectation is we'll see a quarterly turn up. I expect that this will be the same on the NASDAQ. I'll comment. I can't do a quarterly on the NASDAQ. There's not enough info to do it. But this looks to me that even though the algos are suggesting some dissipation of the uptrend, that the uptrend and that angle of attack is going to stay in place. Let's take a look at this 21 quarter moving average here is 3407, and it's going up at about 110 per quarter. So that's going to be up around the extreme lows that we had in that 35 handle. 30. That's probably going to be the extreme. I don't see us backing off of there based on the other charts that we just looked at from the monthly and all that. It just doesn't look like that's the case. So somebody in the live room, I can't remember who it is, but thank you, because I never thought of doing what I'm about to show you next, which is basically setting up a annual chart. So this is a 365-day chart, and this is really interesting, especially, let me get off screen so you can see this. If you look at the algo, it's just collapsing. It's straight down. Last time we had that happen was a bar or two before the 2000.com situation. And what's interesting about that is when I look at the expectations on what the values are, these are huge numbers. So 2919 is where the 10-year moving average is. And if we go back one, it's going up about 300 points per year. The person that showed this, that brought this up, brought up something very, very interesting. So this is going to put me on an alert. Is we have an outside reversal to the downside. Those of you who've been around the channel for a while now, I'm always looking for these big reversal. And even over here in 2000, we basically had a big red bar. We had 3 years down, right? So we went from 2000 down to 2003, and there's still a fair amount of negativity as far as some of the charts go, but it's going to take longer than you think to get us to this decline. And I think the 10-period moving average, you have to realize that the next time this bar updates is next year at this time, in January of 24. So this is a major, major trend that is in place here. And I know it's hard to think in these terms, but the suggestion here is that what we're really seeing here is this big, long trend. I have this STX buy indicator that I have, and it got on the quarterly, I believe it got 5 bars way back in 2002 as a buy, and it's still on that buy from 2002. And when you look at the markets, what's on the screen here, let me get off the screen so you can see it, is the scale at the bottom from 1889 until current coming into 2023. This is like really huge numbers. And you can see some of these trends, even though the PPM started to roll over. See where my cursor is going back. This is like 1957, right? The markets kept this upward slope during that time, because what happened was the PPMs, even though they were declining, were well into that trend phase. In fact, you can see the 10-year moving average was a magic number. And when we came through the 82 lows after the Jimmy Carter hyperinflation that we had back in those days, we just, once we came out of that, we just got this big move up, and then similar thing happened again. We got this collapse down, but that 10-period moving average kept going. I think I was looking that we've only closed twice under that number, and since let's see here, since 2003. So basically, over the last 20 years, we've only had 2 closes. One was, and it was a reverse close. One was in 09 after that debacle. The other one was in 03, which is after the .com situation. And so we retested the highs, we came back down, and then we got this big monster reversal. And right now we have something different going on, is that we'll have probably some kind of top or consolidation start to form here, but it's going to stay more than likely above this 10-year moving average. And as far as having like a big major decline right now, I only have one of the indicators up here, by the way. But if I put everything on there, everything's showing that we're going to stay within the trend mode. And this is like a major secular, I don't know, it's the next level trend that is out there. So whether I've been teasing you folks for a while with a project that I've been working on, but if you look at the concept of onshoring, which is really deglobalization, where we're going to start to bring more and more of the products are going to be made here. There's going to be 2 effects. One is that it will have some stable elements to the economy, but it's also going to embed higher prices from this point forward. my opinion is the Fed will not be successful in getting back to 2%, and that this is a new phenomenon from wages. If there's an if, I'll do air quotes here, if we get into actually bringing companies and making things here in the States. I saw an article, or at least a headline, about Apple is trying to move their production out of China all of a sudden. I would say, let's see, imagine how much an iPhone would cost if everything was made here in the US. What, maybe $2,500 for a phone? Who knows what, right? You're not going to get away with running sweatshops here in the US. And so that's going to raise costs too. Maybe there's some other alternatives that'll be a little cheaper, but the cost of everything, if this new trend of onshoring, and people can hate it or not, but this is basically the Donald Trump strategy of bringing companies back onshore. That was his strategy. So now they're calling it something else because they can't call it that because of what Trump said. But the point is, that was the shift that happened in 2016, trying to build more companies here and to do that stuff. So the bottom line is all these trends are confirming that something is still okay, still good, longer term trends. So, I know everybody, it's hard to buy into some of these longer trends, but after being around these markets for 43 years now, folks, I've been doing this. I've seen quite a few different scenarios coming out of the inflation the last time we were at these levels. And I'm just looking, I'll put my cursor here. This is right here where my cursor is. That's 1982. That was the beginning. We came out of that inflation, but we're talking much higher inflation. When they're talking that we're at 40-year highs, it was even higher than that. It was much higher. We had the short-term interest rates at basically effectively at 21%. So it was a much different environment. People are freaking out over 3.5%, 4%. It's kind of funny, just that perspective of what we have there. So I know I'm getting pretty deep here, but I warned you up front I was going to do this. I'm super hungry, so I'm going to try to get through the rest so I can get home and have dinner. But I want to make sure you understand there's something very big still going on, and America's not done yet, even though some days, many days, it feels like it is. It's not from that standpoint. And it looks like whether it's innovation or whatever, that's going to propel us forward. I think it's a combination of innovation and onshoring, deglobalization, whatever things that make sense to get back here and make things. And everything's not going to be electric, by the way. So, but there'll be more electric. It won't be all electric because it's not possible. But the point is that we're going to see a lot of these trends continue on in spite of how it feels from time to time. Just looking at long-term trends, I just don't see the shift. I think I sunk my putt finally. So let's go ahead. We'll go through the NASDAQ and get through the rest of the show. Should be able to get there fairly quick, except for we have this situation where the 10-year is printing 350, which is absolutely insane. So I'm going to do my best to get through here. I'm already like 45 minutes in, and I haven't got off the S&P yet. So this was the point of what I was telling you about as far as the long-term stuff. And I'm chart gazing. I'm looking at this stuff. The shorter-term viewpoint of anything is actually the database, which is going to walk us out at least 4, 6, 8 months out. And it looks like there's a potential for a lot of solid rotation and stocks to start to participate as well. So I think it's going to be some interesting times ahead, folks. So don't expect the end just yet. All right, so here's the daily NASDAQ. This is sort of interesting, I think. We've got some Fibonacci targets that were generated from tonight's action, and you'll see them right here at 12,947. My goodness, folks, we're talking 13,000. We're Fib target 2, 13,514. Fib target 3, 13,864. So those are pretty insane numbers. The algos are suggesting we're going to stay in a positive mode, just like with the S&P. Everything's in place there. This is a daily chart. And that's crazy numbers that come out of a daily projection from that standpoint. But everything looks like it's in place. The 200-day, it looks like we're going to challenge the 200-day 12,400. So watch out for that. So like I said, if you look at the chart that I put up on my main screen that I come up on video, if you look at that, stocks like Tesla, they're the top trading stocks every day in volume. Doesn't mean they're going to go up, but if you look at that top 20 list, it's kind of interesting to see what's being traded every day in a big way at the moment. So that's the expectations there. I'll click over to weekly here, and weekly has some even bigger numbers that are coming out here. We're looking at 13.1, 14.2, I'm rounding off, and 14,800 are these Fibonacci projections. Now, just like with the S&P, we've got, it looks like this next week is going to be kind of the peak of momentum, but momentum is still going to stay positive as we come into year end. So I don't think we're going to see these numbers I just mentioned hit by then, but the underlying algos, everything is saying that this 10-period moving average, 11,502, is going to be moving up over the weeks. It's just now, it's going to accelerate to 1.08. So that's going to be a pretty big number under here at some stage in the next, I'm going to guess by the time I break for year end, we should see the 10-week moving average start to climb above the 200-week. So that's going to be an interesting scenario from that standpoint. I'm going to just spin over to the monthly for a second just to give you that perspective. Is the monthly is also showing on PPM1 that we're getting increases here, that we're going to see the downward momentum start to round off here. Is coming in right at the 40-month moving average. So it's kind of a turning point here. And just looking at the monthly market grid here, we're looking at the potential for R1, 12,411 is R1. R2 is 12,824, and S1 is 11,672, and we're trading, that's 300 points. And actually, we're 11,740, so that's not even a big number to reach that. That's 100 points on the NASDAQ. But this is the monthly, so this is the outlook for the month of December. All right, so next is RTY. RTY's got this weird looking bubble formation. Oh, this is hourly. Hang on. Let me get this to the daily. Yeah, daily has, as we look at this, has some pretty positive configuration here on the algos. They're looking like we're going to see a continued expansion. So that angle of attack is going to expand even further, meaning that we're going to have a higher probability that we'll stay above this 10, maybe the 21 period moving averages. So everything looks like it's in place there on the daily, weekly. Similar kind of bullish formations here. And we're looking at potential of Fib target 1 up to 2030. We're currently trading at the 1893, so not that big a deal, but there are some expanded, the trends are still very much in place. We're starting to see all the PPMs turn up here. PPM 2 is in very strong position to add a lot of support. 1835 is that number as far as that goes. All right, let's get into these interest rates here. I'll stay with the weekly chart at the moment. We're looking at downside. I've been talking about this. Fib target 1, 3.37, basically 340. Seemed impossible that we would get below 375 at one stage. Here we are closing at 350.7. And I did not look at the overnight action to see what's going on there. I will take a quick glance. It takes me just a second to get there. And we're looking right now at 3.53, 3.528 overnight. So a little bit of uptick, but this number is huge. And the algos are suggesting that the 10 is going to roll over. The 21 is actually still got some reasonable support. So we should hold around where we are right now. This 345, 340 with the Fibonacci targets, all that should, and the extreme is around 320, 325. I mean, that's ridiculous to be talking about those numbers. But as I've pointed out many times in the past, is really what this is about is a complete demand destruction that's happening primarily in housing and any type of long-term financing right now. We're seeing a really back off substantially here. There's just no demand. That's why. And it appears a lot of the QT that goes on, everybody seems to talk about interest rates and forget we've got quantitative tightening. They're selling these securities. It looks like that continues to be more or less in the 2 and 5 year area. And I think at some stage, we'll see the Fed starting to sell the 10s, and that 10 will start to come back up in price, most likely getting up toward the 380, 86, 390 level at some stage. I think that'll happen over the next several weeks. Possibly we're going to get into that whole scenario of window dressing year end on the bonds, on the stocks. Everything's going to come into play here. And we should hold right around the levels. This should be the extreme downside that was here. Sorry about that. Thought I had my phone off. But anyway, so you're going to get those type of situation here as we come into the next several months, that we should see some stability up here. 3.5 should hold. 340 is the Fib target. But we can carry it further because there's other Fib targets. Fib target 2 is 3%, and Fib target 3 is 278, which would be absolutely insane. That would retrace all the way back. Let me just see where these values, that would put us back to August of this year. That's where yields were before we got this big spike. So everything's kind of rolling back. I think it really, the Fed is accomplishing what they want, but they're going to need to sell some securities. That's going to be the obvious place for them to do some selling. I think all the selling's been in the shorter end of the curve because they want that end of the curve to be higher. So at some stage we'll see some of that supply coming into the market at some point. Let's say over the next 4 to 6 weeks, maybe 8 weeks, we should see that. Okay, next we'll take a look at crude oil. We are on the weekly chart, and it's starting to stabilize. I must have read 10 stories tonight talking about how the European restrictions on Russian oil is going to cause Russian oil to be less prevalent in the markets. Maybe that's the case. Maybe that's why we're starting to see a little bit of a bid. There is some really crazy numbers out there. We're in a negative pattern, and we're going to have to get back above the 10-period moving average, 85.03. Right now, last trade, 81.13. I've kind of lowered. I've talked to you about this. Is that fib target on the downside on the weekly or on the daily is key. I don't see us. I mean, we have fib targets on crude oil. The fact that they're there doesn't mean they're going to get hit for a crude oil price at 46.28.17. Probably very unlikely. I'm not going to call that kind of number. I shouldn't have probably even mentioned it. We should stabilize in here. I've been talking about this. This fib target here is basically 71.60. We printed down to 73 and got a reversal. These targets here are what really matters at the moment. We've got 200-week moving averages. There's a bunch of stuff here. And the algos are suggesting that we're at least going to stabilize, but all of the moving averages, since we're trading so much under them, like the 40 is at 96, the 21 is at 86, the 10 is at 85. So all of these averages, it looks like the 10 is going to stabilize here, and the 21 is also stabilizing. It's just the 40, which is way up here, is trying to catch up to prices. So we should see that. I don't think that has any material effect other than setting up the top of the trend. We'll say not the top of the trend, but the top of the cap on the markets. That's going to be the number to watch. Right, like I said, right now it's at 96, and you're probably looking coming down about $1.50 a week. So it won't be long to get in back to that 92 and below into the 90 handle, I think, as we go forward. All right, next we'll cover gold. Gold is looking like we've got some interesting things coming in here. We've got the high target for gold at 1820, 1854. Right now we're printing here at 1820. There's resistance here all the way up. We look at the market grid for, this is weekly that we're looking at. I want to turn off the fib ratio for a second here. But fib ratio is suggesting we're right above the 40-period moving average, which is at 1798. The algos are suggesting a few more weeks of positive numbers. So we're going to see crossovers of the 1021. Did we get that already? We actually have not. We're at 1724 on the 10, 1730 on the 21. So probably next week we get that positive crossover. And the algos are all suggesting that all of the moving averages are going to stabilize and start moving up, which is going to give us, lend a lot of support in this market. Let's just look at it, because I haven't looked at it for a while, but the monthly was pretty insane. Monthly, we got this giant reversal in November. Now we're getting some follow through, and we're looking at the market grid for December, and we're looking at right now, R2 is at 29. We've traded 21. So it's amazing we printed R2. R3 is 1865, 1898. I don't see those numbers getting hit, but we are pretty positive here. We'll see if we go, like I said, on the weekly, there's still, I'm flopping back to the weekly, there's still a lot of positive underlying support here, primarily down at 1730, 1750 range. So expect that those that's where the support on gold's going to be. All right, next is Bitcoin, which is pretty amazing in itself, printing 17,257. This is the weekly. If you remember, this was like painting a huge collapse. As a matter of fact, when I looked at what the values are, we were down into minus 23, 26. Those numbers are starting to to start to fade a little bit. Now the extreme numbers are down around 11, minus 11. So we're seeing that happen. The market grid here, this is actually going to update here in just an hour or so, but the 17,763 is R2. So we printed 17,420. We've actually printed, better call is we printed to R1. And we saw for this last week, we did see a low of 17,080, but we did see at the extremes, we printed down to 15,784 and continuing this 1550, 1525. Everything looked like it was going to come apart, and it didn't. Let's take a quick look at the daily chart here. Let me get the scaling so we can look at this. Daily, and I've been talking about this, the daily actually, PPM 1 and 2 algos have been very, very firm on the upside here. And we're continuing to see getting up to 0.88 plus. So the support's going to be at 16,800. The low so far has been 17,084, high 32, 17,332. So we're still looking at a few more days of higher prices here with these underlying moving averages come up. It won't be, the extreme is at the 40, which right now is at 17,895, and it's coming down. It's coming down about $100 per day. So in the next couple of days, we'll be printing down into pretty much where we are right now, 17.6. And it looks like the PPM 3 is likely to turn up in the next couple of days. So there's still some potential for Bitcoin to continue to hold here. And I think a lot of this, folks, as far as I'm concerned on this, is I'll come back. This would be the end of this stream for tonight. But I think a lot of this is everybody's getting out of almost all the coins. Bitcoin's become the king. And that's where a lot of cash flows coming into with everything with FTX and SBF, and that whole scenario has been pretty ridiculous. But everybody's piling in on Bitcoin. I think a lot of folks taking coins off exchanges into cold storage. All that stuff is happening in a big way too. So maybe there's some perceived demand off the supply and demand off the table, so the supply's starting to get a little less. It's got to be pretty tough if you're a crypto trader to find the exchange that you feel comfortable trading on and putting very much money out after all this crud that's went on. So anyway, I think this will do it. About an hour. I appreciate everybody being patient enough to get through this. But I do want to emphasize, the things that, watch that first section again on the S&P. Think about what's going on with our database. There's a lot going on. And you also should think about getting the indicators, because then you have them all the time. When I'm gone, you'll have market grid, you'll have everything you need. So anyway, make sure you go to the link there, kindlereport.com/indicators, sign up. And there's still a couple of weeks you can hang out with me in the live room as well during that time. So anyway, just looking at a couple comments before I sign out for the night. Yeah, Gino, thanks. The algos, maybe you were the one on Twitter that said you felt like you're cheating. It was like having a crystal ball. Yeah, NFL, it's crazy. And I have to give a shout out to Alex and Alexander, who were members of the community that came up with the concept, and we worked together to get this out there, because it's been a game changer for me. I was talking to somebody earlier today that this has been, I've always envisioned, I can look at what's going on, moving averages, PPM should increase, should do that. To have these algos, and they're incredibly accurate. You just need There's still some interpretation necessary. Like I tried to show you tonight, even though they're turning down what's happening is upward momentum's bleeding off, all that stuff. There's a whole set of videos, and that's going to be back. Yeah, so our Sunday streams are back. So that's why I'm here. So, but a very hungry man here. I'm looking to get home for dinner. But I do like this setup, going back to the evenings. I'm working on another plan for when I come back. These hour streams are great. I appreciate everybody hanging out for an hour and listening to me discuss these markets. But we need to find a more concise way to get the information out and those type of things. I've got a bunch of projects I'm working. You folks are going to be excited, including I'm going to make a commitment to doing a live event here in the U.S. And I'll probably April or so, I'm going to start looking into that, and we'll decide a venue that we're going to do it in, and whether it be here in Arizona or probably Arizona or Texas. It'll be one of those places. And Arizona is a lot easier because I'm here already. So anyway, folks, thanks for watching. Appreciate all the time that you're giving the channel. Hit the like button before you leave. And if you don't have the indicators, don't be left out while I'm out of town. It's an opportunity to get on board. There's support videos and all kinds of stuff. There's basically a mini masterclass on them. So anyway, talk to you soon. See you tomorrow night, same station. Those of you in the live room, see you at 1 o'clock tomorrow. Have a great evening, everybody. Good day trading tomorrow.